Good evening and welcome. You're watching Breaking Views, the only show where we get you all the views so that you get the complete picture. Now we know that this government, particularly in the wake of COVID, started an initiative where they wanted more loans. The whole concept was that you take a loan, go about your life, because the government is not going to give you a dole. So the loan versus dole debate was happening. But what has happened, what data has shown very, very interestingly, not just since 2019 or 2020 at the onset of COVID, but much before that, is that a lot of the loans are being written off from the books, which in effect means that the register is being cleaned up. That doesn't mean the government has written off and it does not care for the loans that it has given, which is basically the taxpayers' money. It is recovering. But take a look between 2017 and 2022, the amount of loan in blue which has been written off, and this is data by the Ministry of Finance presented in Parliament today, versus the recovery that has been made of the loan. So when you write off something, that doesn't mean that you have given up hope. You still try to recover, but the recovery is only 13% of the total loan which has been written off. 13%. Now obviously there is a different way of looking at this when you deep dive into data, because if you see that year on year the number of the amount which has been written off versus the amount that has been recovered, it's complicated, but one has to understand, because somewhere over here lies the political arguments that are being made on either side. Year on year you see that the amount written off is high, and correspondingly the government says that we are recovering more in percentage terms. But that doesn't amount to much, because the amount which is being written off, you see how astronomical it is. 1.6 lakh crore rupees written off 2017-18, 2.4 lakh crore written off in 2018-19. In 2019-2020, 2.3 lakh crores. The next year, 2 lakh crores. Then the next, 1.75 lakh crores. So the recovery may have been steadily going up from 12,800 to 25,000 to 30,000, 30,100, 33,534. But in absolute numbers, should this be enough? It amounts to only 13%, which means we are writing off of many loans which are given to big corporates, which are given to all sorts of members of the industry, to medium and small enterprises, and our recovery is limited. Is this a good sign, or is this a good indicator? Through the course of a political discussion, many are bringing in the UPA 2 era also. And at that time, the situation was not a garden of roses as well. But for a government which claims that it is keeping check on the loans recovered and cracking down on non-performing assets, is this not a worrying picture? The meteoric rise in the loans which have been written off and the rather limited recovery. That's the question that we are asking. The write-off versus recovery debate on NDTV right now. I would like to introduce all our guests. Dr. Anshul Avijit, National Spokesperson of the Congress Party. Professor Santosh Mehrotra is an economist and a visiting professor, Centre for Development. Karuna Gopal, leader of the BJP. We also have Rajat Sethi, is an economist, and Sanchita Mukherjee, economic observer. Thank you very much to all of you for joining us. Dr. Avijit, the political argument first. You see, whenever this figure seems to be reflecting the fact that the recovery is less, it is 13% of the total amount which has been written off. There is a counter figure which suggests that the recovery year on year is also increasing in percentage. I mean, that's the logic which has been given. I spoke to a number of people in the government and outside, and this is the argument which is being given on both sides. That yes, recovery is low, but it is still steadily year on year increasing. How do you look at this?
No, the whole point of the argument of a recovery itself is an eyewash. It's a complete sham. I mean, this is not what is happening. When you say 30% has only been recovered over a period of time.
13.
Yes, 13. Yes, 13 has only been recovered over a period of time of 10 lakh crores. I mean, that can hardly be called a recovery. That's not the word to use. Look, what has happened is, and over a period of time, the economic system of this government is a highly skewed and distorted system that favors big business. We've been saying it all along. And it's not just about NPAs. I mean, there's a whole argument about NPAs. We'll get to it. But when you consider demonetization, the amount of money that was actually laundered, got back into banks, was, large bank accounts, people with large bank accounts got their money back, or GST, which only favored big businesses or corporate tax lawyers or CAs. We have a system, or for that matter, when you reduce corporate tax from 30 to 22%, when you reduce interest rates, the repo rates have just gone up. They've been steadily increasing, but that was only after an off-cycle rate hike in May this year. So you had the longest periods of lowest interest rates. They've only been supporting big business. Big business has only been deleveraging. Big business has only been taking advantage. There's been sheer profiteering going on. I call it the Gujarat model of development that has been applied all over India. There's been sheer shameless profiteering that is being going on without any delivery, without any deliverables, and loss of jobs. So when you write off loans, when you close businesses, you also lose jobs. There is also unemployment that has grown in this. So all your economic indicators are negative for the past few years. They were negative even before the pandemic. People say this, the finance minister always is making excuses, blaming one person after another. First the Americans saying that, what they've done, they've keep increasing interest rates. The industrialists are not investing enough. This inflation is imported. It's not a homegrown inflation. She keeps making excuses. But the fact is that because of bad economic policies by this government, people are, they're floundering. The economy has been brought to a ground. And this is just one example. Can I tell you that NPAs have increased by 365%, and this is RBI data, by 365% from 2014 to 2020 by this Modi government. And now that you've written off the finance minister, in a matter of great, like she was showing off, said that, the NPAs have reduced. Well, the NPAs have only reduced to 5.9% because you've written off loans, and also because there was standstill still on recognition of bad loans by the RBI during the pandemic. There were a number of reasons why you have that particular figure. The bottom line is, and, the political argument, Sanket, corresponds with the economic argument. There is no discrepancy between the two. Because I know very well what
Karuna Gopal, I get the point that Dr. Avijit is making, but Karuna Gopal, what could be the possible explanation where the writing off of loans has seen an astronomical rise? I mean, I'm comparing this to data from 2011, 2012 and 2013. And for the benefit of our viewers, I must also in full transparency say that the data that I have available is only for public sector banks, not all the banks, right? For that 3-year period in UPA 2, the writing off stood at 1.80 lakh crores. Correspondingly, if you measure this up to 2017, 18 and 19, the total amount written off is 6.31 lakh crores. So there has been a massive increase. And this, by the way, is only for public sector banks. I want to understand that while there is an astronomical rise in the writing off, do you think that it's very little solace that you are recovering slightly more over the years?
Well, I heard the passionate argument put forth by the Congress spokesperson. Now, I wish to refresh his memory. Don't look at the numbers from 2014 onwards. Now, we are at the most going back to 2011. But if you really go back further down during UPA, now I want to remind him about the Narsimham Committee report that actually gave the entire autonomy to the banks to go whole hog, because at that time of globalization. I want him also to look at 1998 Narsimham Committee report, where they talked about the reforms in the banking sector and what was the NPA at that time and how was the economic scenario at that time. Sanket, it's very easy to understand when you look at the larger picture, the global economy, the passion with which you invest in growth, always there is directly proportional to the kind of loans that we give. Today, just to give one example, if you look at the infrastructure sector, a lot of NPAs are there. Now, why does that happen? That happens due to various reasons. You have to really dissect and understand what typically happens there. You could have land acquisition problems. There are almost thousands of projects that are stalled. Land acquisition problem. It could be environmental clearances problem. It could be even PILs. So when the government is looking at growth, and when the economy is really wanting to grow, then you look at investments and you help the big businesses take loans from the banks.
That is true. But, writing off of these loans to maybe make the books look cleaner, better, and when you juxtapose it with the recovery amount, I mean, see, again, as I said, data has this unique ability, Rajat Sethi, to make people look good and bad. For instance, if you look at the recovery, it has steadily been increasing from 2017-18 to 21-22. In 2017, it was 7.45. In 2018, 10.6. 2019, 12.8. Then 14.85. And in 21-22, it has reached 19%. Right? So that's a good trajectory. But then when you compare it to this huge, gigantic tower of the write-offs, what picture does it paint?
Well, Sanketji, one good thing that you've done is that you started talking in percentage terms, because it is very important to talk percentage-wise. Back in 2010, our economy was half the size of what it is today. Our bank loans net, books would have been definitely half or much lower than what it is today. So it is important to talk in percentages terms to get the real scale of what you're calling gigantic.
Yeah.
That's point number one. Point number two is, whenever you're looking at NPAs, there are two reasons why an NPA event is triggered. Either the loans were given with bad intent, through malicious intent, or through corruption. These are some of the reasons why, a lot of PSU banks, which famously used to be called the phone banking, politicians used to call up the political appointee bureaucrats, etc., sitting at the PSBs, the public sector banks, and they used to give it to their political friends. That was one reason of bad business logic. The other reasons for NPAs is the business cycle issue as well. When you invest into economies, and then just like any business has risks, some loans will generate good returns, the others won't. That's the nature of business, right? You can't expect a bank to always give away loans which have a 100% recovery rate. Then it would become like as good as printing money. It doesn't work like that. So that's the other point number two, which is important to understand the nature of the NPAs. Now, what has happened over time is NPAs do not result immediately. There is a time lag issue involved always. What we have seen is that during 2012, 2014, there was this classic case of policy paralysis, and a lot of companies, including a lot of big solar companies like Lanco Solar, which had loans of greater than 1 lakh crore on their books, went completely bust. They don't even exist because they were built upon certain business models which were largely irrational and had the political patronage. So what has happened is most of these loans were eventually actually sitting on the books and were hampering the business ability of these banks.
So you're saying these were old loans which
what RBI has done. So let me complete that point. What has happened is that a lot of these banks, then they collectively decided that there should ideally be a bad bank which moves these bad assets from the books, writes them off so that the banks are in a better shape.
Budget also.
Yeah, and they want to be in better shape so that they can lend out better.
But the point is,
today, if you see, the NPA percentage is 5.9.
Okay, let's get a dispassionate view.
It used to be at 13%.
Sanchita Mukherjee, I want to know from you, how does this impact the economy, according to you? Is this a good marker or a bad marker? What does this say about the economy?
All right, thank you. So let me explain it in this way, something that the very basis which none of us have addressed over here. What is a write-off and what is the business of banking, right? In my opinion, this entire subject is not political at all. It is a business decision It has nothing to do with the government, the opposition, or anyone for that matter. No, MP. It is the business of banking. It's a pure business decision. And why would I say that? I would say that is what is a write-off? Write-off is when you have loans which are categorized on the balance sheet on the asset side of the bank's business, right? When you write off or when you give a loan to a borrower, what you do is, as a bank, you have a capital adequacy ratio. From the capital adequacy ratio, you're supposed to keep aside a provisioning amount, right? Without impacting the P&L to a very large extent. Now, if as a bank, I feel that, I need to reduce my assets and increase my liabilities, that is, I need to do more lending at healthy net interest margin, NIMs, right? So I will write off on my asset side. I will reduce my balance sheet. I will release that capital which is there for provisioning, and I will make my capital more and more efficient, which is exactly what is happening at this point in time. So indirectly, what Rajat was saying is that the net NPA ratio has actually come down. What we have gone into this debate with is headline numbers of write-off of 10 lakh crore, but we have not discussed the profitability of the banks, the net interest margins, the capital adequacy ratio, which has allowed banks to do so as a business decision. So now, if the capital adequacy ratio and the P&L was adversely impacted and you write off loans, then what happens? It's a loss. Today, it is not. Today, it is efficient deployment of the capital. Likewise, say, for example, nobody talks about an analogy of the credit card industry. Credit card industry, every player takes a 30-40% haircut. But why don't we talk about it? Because they're extremely profitable companies. So similarly, same with microfinance, by the way, microfinance has a cost of capital at 5%, they lend at 14%, right? There are write-offs on a daily, monthly basis. Nobody talks about it because of the profitability. Similarly, within banks, if a business decision allows me to lend more and write off on the asset side and make my balance sheet more nimble and strong-footed, then it is a business decision. Right. I do not think the MPs understand this
that you put this in perspective
economics.
From a banking point of view. Professor Mehrotra, how do you look at this? Do you concur with the opinion of Sanchita Mukherjee as well as Rajat Sethi? Or how do you look at, write-off versus recovery?
With all due respect to Mr. Sethi and Ms. Mukherjee, let me make a few points that have so far not been made.
Sure.
Firstly, you asked the question, Sanket, what is the impact on the economy?
Yeah.
Firstly, when you are writing off a loan, it means that some effort will be made to recover, but whether that will get recovered or not remains to be seen into the distant future. Firstly. Now, what is the implication of this for the economy? One, that credit then becomes constrained because clearly the bank has not received what it should have received. Rather, it has had to write it off. And yes, in the books, it's going to show up as better profits for the bank because these loans, once they're written off, they go off the assets and they are suddenly now enabled to actually earn them any further to profits. Secondly, let's just remind ourselves that the write-offs have gone hand in hand with your and my taxpayer money worth 3 lakh crores, 3 trillion rupees having been used over the last 5 to 6 years to recapitalize these same banks. That's money that could have been used for capital expenditure, for health, for education. And it cannot be used any longer because we have been writing off on the one hand and recapitalizing the banks on the other. So that's the other downside of what is being done. Third point, which has so far not been made. You know that there is something called priority sector lending, which is 40% of total lending by banks. 22% of that 40% goes to agriculture and 18% goes to the MSMEs. It would interest your viewers to know that 90% of MSMEs who normally receive loans of less than 2 crores return the money. They don't default. Their loans are not written off. So who's the beneficiary? the beneficiaries are the big corporates. And it was rightly pointed out by Abhijit in the beginning that the listed companies have been making massive profits during COVID. In a 7-year, they made the highest profit in the last year. Secondly, corporate income tax rates were cut in 2019. That's the reason that they've been deleveraging.
Yeah,
so
interesting. Professor Mehrotra, this point that you made, Dr. Avijit, Ms. Sanchita, I'm going to come back to you. Dr. Avijit, there was a very important question and a pertinent question. Yeah, one moment. Because, that point that you mentioned, Professor Mehrotra, has been referred to in this unstarred question dated 13th-12-2022 in Parliament. Question number C and D says, the names and details of the accounts in which loans were written off for amounts 10 crores and above, and the names of the 25 top loan defaulters in public sector banks. To both these things, Dr. Avijit as well as Karuna Gopal, the government says that we cannot share this data with you. We cannot disclose the borrower-wise credit information. So we will never know, at least in Parliament, who these defaulters are. Dr. Avijit.
It's very clear who these defaulters are, Sanket. Punitive action is only taken against middle classes and lower middle classes who want to buy, entry-level scooters or entry-level cars, or want to buy first-time houses. These are not for them. These were the names, they would disclose them immediately. There are big businesses that are being protected. That is the entire model of this government's development. That is what happened throughout the pandemic. Do you know that during the pandemic, in the second wave, the sale of Mercedes was the highest? Right? It just goes to show how much money was made because of the equity markets, because of high commodity prices, because of deleveraging, because of low interest rates, because of corporate tax cuts here by big business. This is one other example of it.
Sure.
Now hang on, Sanket. Yeah. The profitability of a bank does not mean the good economic health of a country. Right? Bank can be profitable on lending, but they can be distressed lending as well.
Okay, let me get in a counter view, please. Yes.
Sorry?
Yes, let me get in a counter. Karuna Gopal and then Sachita Mukherjee also wanted to come in. Ms. Karuna Gopal.
Before that, I need to come in.
The point on not disclosing, fine, it's the law of the land, but we'll never know. Professor Mehrotra says that most of these defaulters whose loans are being written off, of course, the recovery process is on, but the exercise of writing off is for these top 25 loan defaulters who have taken the bulk of the loan.
And we will never know if they don't reveal the names. Sanket, it's very important because until we know the names, we will not know whether these are pre-2014 loans or post-2014 loans. So don't take us back.
Okay, Karuna Gopal, your response. Who have these loans gone to?
Committee.
Before 2014 or after 2014? What is being written off at the taxpayer's expense?
I think, Mr. Sanket, I remember the same allegation was there during Vijay Mallya's problem and Nirav Modi's problem, but now today nobody is talking about it because we recovered something like 18,000 crores. So if you remember, in the recent past, the Parliamentary Standing Committee cautioned the government not to be extremely optimistic about the reduction in the NPA percentage. Okay, that's because they are also very clear that the COVID-related problems will surface anyway. In the last 2 years, if you look at even UK has given something called CBIL, that is Coronavirus Business Interruption Loan, and none of that has come back to the banks. We have to factor in all that. And today, if you look at what the government is doing...
While you, Karuna Gopal, if I may interrupt you there, you obviously talk about coronavirus, unprecedented situation, one can understand. But you look at the writing off and the recovery, let's pull that graphic up full frame. This has been the case in 2017-18 also, that gap. It has been in 2018-19 also, and in 2019-2020 also. In fact, in 2018-19, when there was no coronavirus, we saw the highest amount of loans being written off.
Yeah, so as I mentioned in the beginning, a lot has to be understood from the macroeconomic perspective, where the country is headed, what is the aspiration of the country, why would you give away loans, and also maybe factor in what Rajesh Sethi said. Maybe there's not been good due diligence in some cases, and a lot of things can go wrong at the bank level. But if you can again see from the same thing, I see that the write-off has been coming down, and the recoveries have gone up a little bit. So I think one has to stay cautious and one has to be optimistic about it. And given today what we are looking at, the 4R structure that the RBI has recommended in terms of first recognizing the NPAs, I think the banks are doing that.
So
now
on an average, I've run out of time, on an average we are at 13% of the recovery of the written off loans. Now is that, Sanchita Mukherjee, very quickly, is that a good record or a bad record? How much should it be ideally? Please, if you could tell us.
If it allows the profitability of the bank and the capital adequacy ratio, these two needs to be addressed. Profitability and capital adequacy ratio. If it allows a bank to make the decision to write off and recover, then it is a business decision. In the previous years, banks were not profitable. They did not have the capital adequacy ratio to take that call. Post-pandemic, now the banks are profitable. Their healthy credit offtake is at the highest point. Sure. And moreover, to answer Professor over here, it does not benefit the borrower in any way. The borrower is actually a huge loser in this case because they cannot borrow or get a single line of loan from any other bank till they have a settlement. It is not the bank's problem. The bank is profitable. Hence, they have taken a business decision to write off on the asset side.
But
right?
thank
So
you
that
very
they
much
can lend
for all
further.
the perspectives, for trying to understand this complicated subject. But the point is, in pure and simple numbers, that chart on your screen tells you that over the past 4 or 5 years, of the amount which has been written off, which is around 10 lakh crores, only 13% has been recovered. Now it's for the economists to figure out whether this is on the right track or less, and where does this leave our economy and its health. Good night.